Let's begin. So today we will be talking about 3 automated trading strategies and how to pick the right moment on the market to switch between these automated trading strategies that we have here at Bitsgap. So as we actually discussed like 10 minutes ago in the chat here, I will show you my logic that I follow and some use cases based on the sample trades that I have right now active. And I will show you how you can experiment with different configurations, how you can compare them with each other to find the ultimate solution for you, depending on your available balance, because it always also depends on the amount of money that you have, because some configurations requires you to allocate more money than you can actually afford. So there are also tricks with regards to this. Like for example, you can have the same cryptocurrency pair on Binance and let's say on Huobi, and you will find that on Huobi, launching the bot on this particular cryptocurrency pair makes more sense to you because the trade requirements there are lower in most cases. So you can see that, for example, having only $200, for example, you can afford to trade the configuration that you cannot afford to launch on the Binance with the same parameters. So that's something that I will show you as well, because you can diversify your trading not just by having different strategies trading simultaneously, but you can actually diversify your trading by launching different bots on different exchanges, because parameters, they really vary. Because for example, on Binance, the minimum trade size for the most cryptocurrency pairs out there is around $10 per order. So that's the minimum trade size for one limit buy or limit sell order. Whereas on exchanges like OKEx, or here I have Huobi as well, the requirements can be different. It can be better compared with the Binance. So it's something that you really need to check before you configure the bot, and we will actually play with it today. So let's real quick go through the trades that I have right now. I actually closed some trades, and you see I have a different mix here. So I have some coins trading to Bitcoin, like this one. The aim of these bots is for me just to accumulate the 0x on this downfall and the poly on this one. Well, the thing about the poly trading to Bitcoin is that look at the market here. It's really trading from the support line where you see the price of 0.000000526 satoshis, right? So you will notice that it bounced off this level already 3 times, no, actually 2 times, but right now we've approached it again, and it looks like to me it's gonna bounce off again, because it's been quite a long time for this particular market trading in the sideways market formation. So that's a perfect example for you of the cryptocurrency pair where you can launch the sideways bot. And we know that for the sideways market we have the Azure bot, because it brings you the most money compared with the classic bot. So that's actually what I did on this particular market, because I see it's trading perfectly in the sideways market formation. So why not taking opportunity here? Why not allocating some polys and Bitcoins just to take advantage of these price swings and to accumulate more Bitcoins, right? Because if you look at the price of Bitcoin right now relative to dollar, you see we actually breached this triangle formation here, and this is a pretty much like a bullish signal. Apart from other signals that we have, like if you check other metrics, you will really see that we are in the phase of accumulation, and like most of the indicators and fundamentals, they are in favor of at least short-term bullish market. So it really makes sense to to take advantage of this market right now. So for me, the aim here is, as I trade poly to Bitcoin, I make, like, my bot makes me money in Bitcoins, right? And at the same time, I expect the price of Bitcoin to appreciate. So that means that the value of profit that I made in this particular trade, which is right now $66, it can also appreciate by the fact that the price of Bitcoin relative to USD also appreciates. So it's pretty much like this. You make your profit in Bitcoin, right? And at the same time, the price of Bitcoin relative to USD appreciates. So that's a double effect. Well, it's not like exactly 2x, but it's pretty much you get a bigger multiplier. So that's the aim I follow here. That's basically how you can mix with strategies. You can have some strategies in which you make money in the crypto, let's say Bitcoin, the value of which you expect to appreciate relative to USD, right? So in my case, I'm trading 0x and poly. The poly, once again, I explained, I can see a perfect sideways market formation, so why not taking advantage of it? You see, it's already made me like 21% in 25 days. So that's pretty much 7% per week, right? More or less, like it's around 6% or something per week, which is exactly what I mentioned. Like you can really come up with these strategies that can bring you around 7% per week if you really recognize perfect market scenarios where you can take the most out of the market by launching the as bot, for example, or the classic bot. So for the poly and BTC, it's clear to me that as bot right now is the perfect one. And honestly, it's not the financial advice or whatsoever, but as I look at it and I see that it's pretty stable sideways market formation, I'm pretty much sure it will bounce off this level again. Yeah, so that's the thing. But even if it's not, even if it does not bounce off this level, in any case, I'm indifferent because I right now have this amount of polys in my portfolio. And in the midterm perspective, I do believe that the value of poly will appreciate. So for me, that's okay. I mean, if the bot is no longer trading in the direction that I anticipated, but at least I have this amount of polys that I would otherwise buy in my hodl portfolio. Like by hodl, I mean a certain stake of your entire portfolio where you just hodl some coins and you do nothing about it. So right now it looks like this exactly. Like I have this amount of polys, they are in my portfolio. So it can be that in a midterm perspective, they will appreciate relative to USDT. So that's why I'm indifferent to the fact that right now we are trading below the trading range that I set. But more or less, like I'm more confident that it will bounce on this level and it will go back to the zone where the bot will continue trading like it did in this area. So that's it. So by mixing with these different strategies, you can really come up with perfect solutions that can bring you around like from 5 to 7% per week. But you can actually construct even better strategies that can really make you like 100% per month. But in order to achieve this 100% per month, it's just about the market timing. So right now it's not the best time to actually launch these configurations because it doesn't seem to me that the market is bullish enough to grow rapidly. And the only way for you to achieve 100% per month is when you see the market, like when you see like very strong bullish sentiment. Right now it's not like that. I mean, there was an attempt in Bitcoin to breach 40k, but it failed. It was rejected here. So right now we are trading again in the zone of 38k. So as soon as you see the price breaching this area, and right now we can perfectly spot it, it's around this zone. Let's make it wider like this. Yeah, so it had like several attempts to break it in this area pretty much it touched it, and here you see pretty much also touched it and then reverts. So the moment you see it breaching it and the price trading in this zone, it can possibly then bounce, like drop again and then bounce off. So when you see this kind of scenario of the price breaching like very aggressively this price level of 41k in that case, then this is the time to actually like for me to reconsider these strategies. So for me it would be no longer that profitable to hold on to these trades, because I know that now the market sentiment has changed to the strong bullish sentiment, and that means that I need to close this S-bot, this one and S1, because we are no longer in the sideways market in that case. Then that means that we will enter the rising market, and on the rising market the best way to earn is with the classic bot. The thing about the classic bot is that, as I mention every time, it accumulates more coins. Basically it increases your exposure by around 40% more than the S bot on the rising market, because the thing about the classic bot is that it always buys and sells the same amount of coins. So even if it costs, like for example here 10 coins cost you like $100, so it's gonna spend this $100 to buy 10 coins. But at some point you will see that the price of 10 coins is now like $200. And in this case, the classic bot will spend $200 to buy these 10 coins. So you see this pattern that the more expensive is the price of the coin, the more money is required for the bot to actually buy this same amount of coins. So that means that you gradually increase your market exposure, and that means that you basically buy more coins compared with the S bot, and of course in that sense the classic bot on the rising market will bring you way more returns than the S bot. But right now you see, as far as we are still trading in the area of the sideways market formation, which is from around 31k up to 40k, it's not yet the right moment to flip the strategies to the classic bot, because right now it's still sideways, and we know that on the sideways market the best strategy is actually the S bot. So that's why right now it's not possible, it's not the best market timing to flip strategies in order to aim for 100% per month. We can expect around 100% per month as soon as we will see the price of Bitcoin breaching this 41k, and at least like for would be better to see 4 days of the price staying above 41k. This would bring us more confidence that the bullish sentiment is strong enough, and that the price would most likely continue the rally for a while. And we need to take advantage only in that case out of the market when we see this strong bullish momentum. Right now it's just not yet the moment. So that's why stick with those strategies that are designed to bring you the maximum returns on the sideways market formation, and that is this S-bot strategy. So now let's talk about the different configurations you can have with the S-bot strategy. So the thing about the S-bot, and let's actually choose any random coin. Maybe let me switch to the demo mode, and let's choose Binance, whatever, and let's choose maybe let's see some coins we have. Maybe BNB. Yeah, actually BNB looks good. It's a pretty good one right now. Let's go back to BNB. Where is that? USDT. So I would stick with this kind of configuration. The price is somewhat in between right now. It's like in the middle, you see. It's more or less the pattern formation known as the triangle ascending bottom, and in this pattern formation you can recognize the accumulation phase. Basically, you can see that the power of buyers on the market right now is strong enough, and that's why we have new lower highs. You see, that's the lower high, that's the lower high formation, and that's it, lower high. So it's pretty much respects this ascending line, angled up support line. It's not actually a perfect one because you see I actually mimicked this one, but this one, what you see here is basically the noise happening, so that's why it's pretty much what I don't look at right now. But on the top you have resistance, right? And in this resistance it's pretty much clear that sellers are not letting the buyers on the market to push higher. So in any case, this kind of pattern formation tells us that the accumulation is strong right now on the market, and on the accumulation phase it makes sense to trade the SBOT, because accumulation most likely will be prolonged for some time and it will form a sideways market formation. So right now that's an ascending bottom triangle, which is a good pattern, by the way, and we can stick with the configuration you see right now. So I have my lower price somewhere around the lowest high we had over here, and the upper price right at the point where we have our resistance. So it's a 50-50% split right now. Okay, so it's from the risk perspective, maybe that's not the best trading setup, because your entry is somewhere in the middle, right? So maybe not the best one. And as you look at it and you see that from the risk to return perspective, in order to sustain this configuration, you need to have your stop loss around this area. So that's a long way to the stop loss, right? So at least consider allocating less for this particular strategy, just because the stop loss is quite far from your entry price. I mean, if you would have entered this market at the point where you had this lower high, then your stop loss would be relatively close to your entry. But right now it looks like it's pretty late to enter with this exact configuration, but still makes sense because at least you can allocate less than you would otherwise do on this price of where we had it at 321. But you see 50-50 split is okay, so I could allocate, let's say maybe 500 USDT, and on average I tend to allocate, I mean I set my parameters so that my grid step is from around 0. Well, usually it's from 0.7% up to 1.4 or 3%. So that's the range that I select for my grid step. This particular grid range has proven to be successful for me. It brings me around 30% per month for the SBOT, and it can actually bring me even more if I am trading the classic bot on the rising market. But that's from my experience, that this particular grade step range from 0.7 to 1.4% is a good range for me to have 30% per month approximately. I'm not sure that I would enter this particular market right now because I don't like the fact that my stop loss is that far based on this configuration, because I feel like it can actually breach the triangle down to that point and it actually can revert. But I mean, that's the risk I need to take, right? And I'm actually not sure that I want to do that. So I'd rather look for some other coins that we have out there that have a better market entry. So maybe if you look at the ontology to USDT, and by the way, I'm not trading ontology because I'm not familiar with this coin. So trade those coins that the fundamental value of which you understand, right? So in that sense, I don't really know about the ontology that much, so I'd rather not to. The Syscoin as well. Well, Ethereum, by the way, if you look at the Ethereum right now, it looks pretty good. Entry price, remove drawings. So this one looks pretty good. Let's switch to Ethereum in that case. Where is that? Ethereum USDT. So I think since we have many things happening around Ethereum right now, the situation with the Yape and all that stuff, and the roadmap for the transcendence to the proof of stake and all that stuff. I mean, Ethereum, in my opinion, from the network value perspective, has more potential for this year than Bitcoin itself. And as I look at the chart right now, I can actually spot this pretty much also ascending triangle bottom formation, and with this being the resistance pretty much, and with this area, yeah, more or less being the ascending support line. But at least here I would set my lower price around this area and my upper price here. So in this configuration, you would notice that my stop loss is going to be closer than in the configuration that we had on the BNB trading to USDT, right? So in this case, I'd rather stick with this configuration on the Ethereum, and also taking into account that I believe more in Ethereum from the network value potential. So that's why I'd rather stick with this one. So that's the configuration you can play with, where you have your lower price to the point where you had your previous lower high, and the stop loss below this area, so below the support in that case pretty much, and the upper price exactly where you have the resistance. So because you see it's pretty much bounced off the support 3 times already, so there is enough confidence that the price will continue the short-term rise. So that's why for me it makes sense to try this one. So the amount of grid levels I would put maybe around 34 or something. It looks good to me. Notice that in this configuration your split of the investment will be around 65%. I can visually see this, and 35% to buy orders. So that means that, for example, if you allocate $1,000, then 65% is gonna be, that's $650 in that case. So you will need to have Ethereum already on your balance worth 650, and that's exactly 0.27 Ethereums you need to have, and the rest is $340 as stated here, which is the amount of USDTs you need to have just in case if the price of Ethereum falls, and this USDT will be used to buy more Ethereum, to basically allocate more Ethereums in your portfolio and to achieve a better entry price, right? Because the thing about the automated bots is that it splits your investments proportionately, and by doing this it achieves better dollar cost averaging effect. So you don't buy everything at one price, you have a split of your investment. So you buy a bit at this price, when the price again falls you buy a bit more Ethereum, and again if it falls it buys a bit more Ethereum. So all this total purchases made on the market make up you a better entry price, as if you would buy, like as if you would go all in at one price, right? So this is where automation really outperforms manual trade in that sense, because it's fully automated, achieves dollar cost averaging effect, splits investments, and can actually trade for you 24/7. It always buys this at lowest price and sells at highest price. So that's like the ultimate bot you can find right now on the market. So with this configuration, I'm pretty confident to enter the market. My stop loss is not that far from the entry price, so that's okay for me to allocate that much. And I anticipate the price to at least reach the resistance again. And hopefully, if it breaches it at this point and goes even higher, then at this area I will most likely switch to the classic bot. I mean, this should be the as bot, the one that I just constructed. But if it breaches the resistance, then it makes no longer sense to trade the as bot, because we know that as we enter the rising market, then it makes more sense to trade the classic bot. So this is when I will switch to the classic bot from my as bot at the moment when I see the breach of the resistance line, like this one I just made on the chart. So yeah, that's the thing. I mean, there are lots of strategies out there that you can guys use, like for example, no, that's not the one I wanted to show you. Like this one is also a perfect market scenario where you can enter the as bot, because you'd see that's the horizontal support and horizontal resistance line, and this is the pattern you can recognize from books, and this is the configuration that you can use. It's pretty much the one I showed you. You see the stop loss is pretty close to your entry price, and it's enough potential to reach the resistance. And I mean, find your top 3 patterns and learn to recognize them on the market, because patterns, they really tell you a lot. They really tell you a lot about the market sentiment, market timing, and basically the market confidence right now. So when you see the pattern formation like this one, that's pretty much the bullish formation, and this way it not only forms new lower highs, but it also forms new higher highs. So sellers cannot withstand the buying pressure, and that's why you see new picks here higher. And also buyers, they are so strong that they don't let the sellers to push the price below this lower highs. So you see it's rising by the support and by the resistance. That's a perfect market scenario to launch the classic bot. The one you see here, it's for the classic bot, and that's the configuration that you can actually use. As you see the price not just bouncing off the support line. I mean, it's not enough for us to see it approaching the support. So many traders actually rush into the trade at the moment when they see the price just touching the support. But like more experienced traders, they would rather wait for the price to bounce off this support and to enter only when you see some confidence in the market bounce off, like this one. You see, that's the successful bounce off. Here we have more confidence that the pattern will continue its formation again up to the new resistance. And the thing about this entry price is that in any case your stop loss is pretty close to your entry, and that means that your risk here is limited, but the potential, like return potential, is bigger than the risk that you take in this trade. So that's the thing. Look for the pattern formations. Make your list of top 3 patterns. And by the way, at Bitsgap we have some patterns that I explained in the blog, so you can actually look at them and use some of them. You can try them and see if they work for you. And yeah, you see, automated strategies part 2, for example. Here I have some patterns for you, those that I prefer to use, and all explanations here. Risk management also explained. you can actually find the first part as well. Here we have some patterns that we just covered with you guys. So this is where you can find the exact configurations I used and justify, you see. So it's here for you. I mean, you don't need to blindly trust me. I mean, you got this pattern formation, you recognized it. It's no need to rush to trade your real money. You can trade with virtual money just to make sure that you can recognize these patterns and you can make money on these pattern formations. So you can trade on the demo mode before you rush trading your real money. So you see here in the demo mode, I have this active trade right now, which is trading for me, or it's not actually trading. I don't know what's happening in this one. Wow, that's strange. Wow, cool, looks cool. Yeah, but yeah, actually something wrong with it, because you see, it shows me only like 200 trades, but in reality I had like 5,500 trades. So it's just that it's maybe lagging right now to upload all of these trades on the chart, but yeah, pretty much it should have more for sure. But anyway, the thing about the demo mode is that you can set any configuration, you can test it on any crypto and to see if it works for you. And then you can, once you build enough confidence in your trading setups, then you can start trading with the real money. So that's the thing about the demo mode. Let's go back to the real trade mode. So right now, well, I'm not covering this in this webcast because that I covered in previous webcast, the rationale behind the reasons why I entered this market with this kind of setup. And in this kind of setups, you see I have my grid step like 3.82%. That's heck of a lot. Here you see 5.74%. And the reason for this huge gap is because I only launched these bots to capture this market dip. I didn't want to set perfect sideways market bot. I just wanted to use the algorithm of the bot to buy the dip at the best price. So that's why I have this gap of around 6% to achieve a better dollar cost averaging effect. That's the only purpose of this one. But right now, you see, we are now in the sideways formation. So in the perfect scenario, I actually should close this board and relaunch it with the better settings, where my grid step is now around 1.2%. instead of 5.74 that I have right now, because it makes no sense for me to have it that much right now, because I feel like the dip is in the past and it looks like we are gonna move in this sideways formation for a while. So it makes sense to switch to another configuration with the SBot, but where I have only 1.2% of the grid step instead of 5.74. So it's all about the market timing. The first time I used this strategy, my aim was just to achieve the best dollar cost averaging effect, and that's why my grid step was around 6%. Now is the time to actually flip to another configuration on the same bot to achieve better results. So that's why it makes sense for you to check the activity of your bots like each 3 days to make sure that the current market conditions comply with the configuration that you have active now. So once again, the configuration I have, for example, on 0x to BUSD, from the market standpoint now, is no longer relevant. It's not the ultimate result it brings me. I mean, I should switch to another configuration where I have my grid step of around 1.2%. So actually that's something that I will do after this webinar, because I just noticed that that's the time actually to switch. Same applies to the quantum. You see 4%, it's no longer justified. I mean, I perfectly see the accumulation phase, and it makes more sense to trade with a narrow gap to make more returns, so that I let the bot to seize more market swings. Having that wide gap is not healthy for the bot, because, like, for example, if you look at my it's not, yeah, I think that was LTC, not the LTC. I actually forgot the one there. Yeah, actually 0x, you see, before the volatility was bigger because of the market dip and all the market fear we had in this time. So right now it seems like everything's pretty much stabilized, and we had news around the El Salvador, which is positive for the market, and we see it's pretty much stabilizing. And that means that on a stabilizing market, it makes sense to have a narrow gap, because in the narrow gap, this is where the bot can trade more. And right now, I don't feel like the volatility is gonna be like we had in the time when we had the market fear. So it has changed, you see, and that's why it cannot actually seize my grid levels as of now. I need just to switch to a narrow gap in that case to let my bot to have more trade opportunities. Otherwise, I just need more volatility, and yeah, it's not there. So that's the rationale behind the bot, is that you need to have several trading setups. The first one is to buy the dip, and in order to buy the dip, the grid step should be around like 5, 6, sometimes 7%. That's what I did here with these bots. Now it's time to switch to the second trading setup, and this trading setup is the perfect one for the sideways market, which is no longer that much volatile as we had on this period of deep fear. Now it makes sense to trade with a narrow grid step of around, as I said, 0.7% up to 1.4% approximately. So look at the market, look at what it shows you, look at the pattern formations that can really tell you a lot about the market sentiment, because that's us people forming this market, drawing these charts. And these charts can actually tell you about the market action a lot. And using some extra tools like the volume profile, you can see the point of interest, basically the point of price where we had the most volume traded, and it can tell us whether or not we are now in the bullish sentiment or it's more like a bearish sentiment, right? So here it's pretty much trading at the area of the point of interest. It's below it, so it's pretty much more that the sentiment here is more bearish than bullish. But as I will see the price trading above this point of interest, then this will bring me more confidence that the rally will continue. But still, taking into account the price right now and other formations, from the risk management perspective, it still makes sense to enter Ethereum and USDT, because I would put my stop loss around this area, which is pretty close to the entry price still. So, but that's my logic. I mean, I prefer to enter those trades where I have my stop loss relatively close to the entry price. So in this case, this makes sense. What else we should cover today? So yeah, two trading setups. The first one, buy the dip. The second one, as you see the market stabilizes, enters the sideways market formation, it makes sense to change your configuration to the narrow grid. The third setup is to flip your strategies to the classic bot as soon as you see the bullish sentiment on the market. Right now it's not bullish enough. Like I explained on Bitcoin, we need to see the price breaking 41k, and for other coins you can also see the resistance that it should break in order to bring more confidence that the market is now in a strong bullish market sentiment. And this is the only time when you should consider switching to the classic bot, because classic bot is a bit more, yeah, it's pretty much riskier than the S bot, because as I said, on the rising market it increases your market exposure. So it makes sense to trade classic bot only when you are confident that we are now in the market rally. It's not like that yet, so wait for the right moment to switch to this strategy. So 3 trading setups we just covered. And maybe the fourth one would be to consider the combo bot. So the thing about the combo bot, and let me actually switch to my another account where I will show you exactly how I use the combo bot. Right now I'm not using the combo bot, and the reason for that is that the market is in the sideways formation, and for the combo bot, the sideways market is actually the worst market timing. You should stick with the combo bot only when you have either a strong bullish momentum or a strong bearish momentum. Let me switch to my another account real quick. Yeah, here we go. So right now I have one bot active, that's the Bitcoin short bot. So I'm actually shorting Bitcoin. You see, the reason why I launched this bot is because I saw the price rejection at the resistance. So that means that the bullish sentiment is not yet strong enough. So in my opinion, from the risk management perspective, it makes sense to actually enter the market with a short bot just to hedge against the falling market. That's actually what I did, because my stop loss is pretty close to my entry price. I feel like the price is gonna move like this, you see, and it's gonna fall down to this area around. That's what I pretty much expect to see from the Bitcoin in a short-term perspective. But this is based on the fact that we have rejected resistance here, and it's pretty much the head and shoulders pattern formation that you can spot right now. And in head and shoulders, it's like this, pretty much. And that's why I entered this trade, and having this all in mind, the entry price is pretty close to the stop loss. So that's why, from the risk management perspective, this is the reason why I entered this trade. And so far so good. And the thing about the combo bot and the algorithm that we utilize in this particular trading configuration is that the bot splits your margin. Let me check on basic attention, for example. Let's say you want to trade basic attention. Let's say you want to trade short. So as you trade short and you, let's say, allocate 100 USDT, it will use 50% at the entry price. So it will allocate 50 USDT right at the start. Another 50 USDT will be allocated here in short sell orders, these red lines. So that's another 50 USDT. And in order to allocate these buy orders, which are in that case take profits for your short bot, these green lines, you also need to allocate margin, which is also 50%, and that's $50 here. And the thing about the algorithm is that we have another layer of short sell orders, which are invisible at the start, but they will emerge if the price breaks this level, like this first layer of short sell orders. And if it breaches it, you will see new sell orders, short sell orders emerge here, and which also require to have around 50 USDT. So like if you calculate this all together, 50 4 times, it's going to be $200. So in the worst market scenario, you can expect the bot to lose not $100 but $200 actually. I have some examples here where I can show you these bad market scenarios that I had. Let's use from October. So you see worst market scenarios here, minus 100%, and in worst cases that was exactly 200% loss. So you see, double of my initial margin price. So here we had what, $100, and I told you that you can lose up to 200 approximately. So that's exactly what happened with me here. You see, I lost almost twice, and here also almost twice, but in most cases that's just 100% in my case. So keep in mind that when you trade the combo bot, as you allocate $100, then like pretty much the average maximum, the median average you can lose is up to 200. If you allocate 300, then you expect that you can lose 600, for example. So that's the thing. That really depends on the market volatility and how the price will swing, and depending on this, it can be that you can lose up to 200% and sometimes even more. I just had like one case when I lose more than 200%, but on average the maximum is always like around 200%. That's just because of the algorithm we use in the combo bot. So always keep in mind, if you allocate 100, then you can expect to lose 200. That's the way I apply the risk management. So as I have my $250 bot right now, I know that I can lose around 500. In order to minimize this, I set my stop loss lower. You see, it's actually here. So I avoid these short sell orders over here. So that means that my loss is limited. So keep that in mind, that you can play with it as well. By putting your stop loss pretty close to your entry price, you minimize your risk significantly. So that's the thing about the combo bot. That's the futures market. And the thing about the futures market is that there are many things that affect your trading, like the leverage that you use, the margin that you have available to cover this trade. So many things to take into account. But to make it simple, just remember that you allocate initial margin, let's say $100, expect to lose maximum around $200. In order to have control over this risk and to even minimize it, make sure to set your stop loss, well, pretty close to your entry price, but not too close, because otherwise you basically don't let the bot to trade the market, because if you have it like too tightly closed, then you don't give enough space for the bot to trade, right? It should be always a justified entry, and here the entry is justified, and that's why my stop loss is pretty close, because it makes no sense to have my stop loss around this area. I know that it's pretty much if it breaches this local resistance, then most likely it will continue rising higher. So that's why I have my stop loss pretty close. So you can check my history, it's pretty successful here. That's around 17%, and I had some good trades that covered like 2 losses in a row. I had like this kind of trade with $425. So with the combo bot, it's really about the market timing, because here the risk is exponential. You have here higher risk than in the S bot and the classic bot. And the way I use combo bot right now is just for hedging purposes. So I see the price of Bitcoin being rejected at 41K. For me, that's enough of a reason to short sell this market, just to hedge against the possible downfall. So that's why I launched this bot. Trading a combo bot in the sideways market makes no sense. Imagine the price of Bitcoin is somewhere around this area, in the middle, like 37K. We have our support around 31K, and we have our resistance around 41K. So that's pretty much somewhere in the middle. And like launching the bot in the middle it's pretty much risky because most likely it will move again sideways, and the combo bot is just not designed for the sideways market. On the sideways market with the combo bot, most likely you will achieve zero return because it's the delta neutral zone for the bot, and it really makes sense to set the combo bot only if you want to hedge against the risk, as the one I use right now. I'm hedging against the rejected Bitcoin here, and I feel like it's gonna fall. And another scenario where I would launch this bot is if we would fall to the support line, to that point, 31k. This is where I would try to launch my long bot, because I would put my stop loss below the support, so that's going to be pretty close to my entry price, so the entry here is justified. And the third scenario I would launch the bot is only if I would see the price of Bitcoin breaching 41k and staying above 41k for like 4 days or something. This would give me more confidence that the rally will continue, so I would in that case gradually enter the market with a long bot. So that's my rationale behind trading automated bots, and it's always about the risk. Make sure to diversify properly. You can have some manual trades that you open here in the smart trade mode, where you have manual instruments like limit buy, sell, take profit, set, multiple areas, stop loss, stop limits, all these tools. That's the manual trade. This is where you have the most control over your positions. You can move your take profit, you can move your stop loss. Then the next strategy would be automated bots. Automated bots, they follow its own algorithm. You cannot move these limit orders. You can only change the stop loss and the take profit. But taking into account that automated bots achieve you the best dollar cost averaging effect, plus they trade automatically 24/7 and they daily generate your returns, it makes sense to have some automated bots in your portfolio. And the third allocation goes just to hodl strategy. And let me actually show you some hodl trades that I have. So by hodl I mean having some coins in your portfolio. So you just buy something and you forget it for a while. So that's what I did with some coins like the VU network. Let me show you. I have it in Huobi, I guess. Where is that? Trading order history. So you see, I gradually purchased VU at some price levels here, and right now the price of VU is around 1. So despite the fact that the Bitcoin price is moving sideways, you can see that there are some prominent projects that are actually rising despite the fact that Bitcoin is moving sideways. So the VU is one of those examples, and you can actually find a few more coins like the VU that are moving against the Bitcoin. So the VU token would bring you now more returns than if you would trade just Bitcoin. So there are only a few coins right now on the market which are exposed to this rally. That's because these are pretty prominent projects, and investors, like big name investors, they are actually buying these coins on this market downfall. So you can actually see quite few more coins like that are trading up despite the fact that Bitcoin is moving sideways. So the VU is one of them. I'm not saying that you should rush now and buy VU. I'm just showing you that I have some hodl coins. So I just purchase it manually and I just hodl it because I have some fundamental research on this one, and the market price actually proves itself to be bullish. So make your own research always. Look for the diversification of your portfolio. Have some hodl coins like the one I have here, that's the wool. Have some bots that will trade you, make you money on the sideways market. So you, like, even though that's the stagnant market right now, you can still make money on it with the sideways bot. So that's the perfect tool to use to generate returns when the rest do not make any money. And have some manual trades with multiple take profits and the stop loss that you can always change. And that way you can achieve decent results. So for example, you can see your automated bots, let's say you allocated 50% of your entire portfolio, and you can see that in a month it made you like, I don't know, 30%. Let's say you have some manual trades as well, and you allocated maybe 20%, and manual trades made you like, I don't know, 50%, whatever. And you also have hodl, like the rest 30%, and this made you maybe, I don't know, maybe 30%, whatever. So like you can estimate the total result by this split. So 30% out of 50%, 50% out of 20%, and 30% out of 30%. So you get your percentage, sum it up, and you get your overall result for the month. So I mean, utilize as many strategies as you can. Like here, for example, 30% out of 50, that's going to be what, around 16% or something, right? Here 50 out of 20, that's going to be 10%, and here 30 out of 30, that's going to be 10%, right? So altogether the result is around 16 plus 10 plus 10, so that's what, 26, oh sorry, 36%. But I mean, that these are just random numbers. I'm just showing you that it really makes sense to diversify, because some strategies can bring you more, some few, but altogether they make up decent returns in the midterm perspective. And the risk here is minimized, because in auto bots, you know that they achieve the best dollar cost averaging. In manual trades, you have the best control over your position, so you can always change the take profit and all that stuff depending on market conditions in order to maximize your returns. And in hodl, you can actually generate max returns if you are patient enough to let the price to rally. So consider this rational and find your ultimate split. And that's basically my purpose on each webcast, to show you that it's always about the risk and knowledge on different configurations that you can use. So we covered like 4 trading setups as of today. That's the one to buy the dip. The second one is to trade the sideways market. The third trading setup is to flip from the sideways to the rally bot, which is the combo bot. As soon as you get enough conditions from the market that will bring you enough confidence that the rally continues. And the fourth the fourth trading setup is using the combo bot to hedge against the risk, or to risk on the rally, but make sure you have the best risk management in the combo bot. That way, utilizing all these trading setups depending on the market conditions, you can achieve these decent returns, like 100% per month on the rally approximately. And from my experience on the sideways market, you can achieve around 30% per month, which is approximately around from 7 to 10% per week, right? So that's actually what I got now. You see 30% on this one. Here I get even 50 for the 1 month, 20% for 30 days here, lower than the rest, but this is covered by the fact that I have more in Bitcoins. So, I mean, these configurations, they bring me enough based on my expectations, and I'm pretty confident that following these 4 trading setups at the right moment, you can achieve decent returns. Yeah, so basically that's what I wanted to cover today. That was exactly 1 hour. Let's see if you have some interesting questions out there. Is there a way to readjust your grids while the bot is running? No, it's not possible. You just need to close the bot and launch it with new configuration. That's the only way. Only few things that you can change in bots. That's the trading up, the take profit, and the stop loss. By the way, I always set my trading up, because that way I ensure that if I'm away from my keyboard, or sorry, laptop, or whatever happens, and during this time the market makes significant rally, having my trailing up on, I make sure that the bot will follow this rally. So my trading range, which is now up to 44k on Bitcoin, it will be actually readjusted to new market price, and you will see my upper price now in this area. So my actually trading range will follow the rally to ensure that the bot trades endlessly. So I always make sure that I have my trading up on the ASBot. Let me check if you have anything else. How can we get the volume indicator on the right side like yours? So in my case, I have a paid plan on TradingView, but you can actually use the trick. Let's say you don't want to pay. I pay just for the convenience, but there is a trick here. Here you go, and you have this thing known as the fixed range volume profile. So for example, I want to know where is the point of the most interest from the 3rd of January until today. And voila, it shows me the area where I had the most volume traded. So that's this exact price. But the thing about this instrument is that you need to adjust, like readjust it all the time. Like if you zoom out the chart, now you have more price points, so you need to actually change it. You can actually have multiple, you see. But I actually prefer to use the one in the paid plan, because that way every time I zoom out or zoom in the chart, it automatically adjusts, you see. So it takes from this last price down to current, and it always changes that way. It's just that I paid for the convenience, but from the financial standpoint, you should guys really use this tool that they have for free. Makes more sense. It's not available at the setup at Bitsgap yet, but I think we will add it soon, pretty much. But right now, use it here in the TradingView. What else we have? When will we be able to trade demo mode on the combo bot? So this is coming in the future, because the combo bot really requires to lots of data flow as an input compared with the ASBot or the classic bot. So that's why it's still in the process, so that the system, like servers, can handle that many data flow requests. But in the future, like the nearest future, you can expect to see the demo mode for the combo bot. Yeah, well, I see that the investment change and the bot profit are two different metrics, but they are interrelated. So the thing about it is that the change shows you the return or loss to your investment, whereas the bot profit is always positive because the bot can generate money on any trend. On the downfall, you see, it can always find these short-term opportunities to buy low and sell high, to buy low and then sell high. But this return generated by the bot can be sometimes not enough to cover the overall market plunge. You see, in general, the price is like falling from, if you look at from that point, you see, it's pretty much falling here. So the value of the base currency, which is in that case what, Litecoin, yeah, so it's falling. The price of Litecoin is falling, so that's why you see, like here I have only 30%, whereas my bot profit is 20%. That means that this profit made by my bot offsets the negative value change of my Litecoin, which is falling. And sometimes you can see the negative value. But here in 0x and Poly, I'm completely indifferent towards the change because I only care about the value change to my dollars value. Whereas here I use this bot just to flip Bitcoin to 0x on the downfall. That was the only purpose. So I'm indifferent towards these results here. I just used the bot algorithm to flip my Bitcoin to Polys and then 0x to take advantage of the falling market. What else do we have here? I mean, there are lots of things that are in the development process right now, and you can expect to see new bots coming soon. You can expect to see new features coming soon, more flexibility in the risk management. But as of now, you have all the tools that you really need to have the ultimate configurations that can bring you maximum returns out of the market and can minimize the potential loss. So you have it absolutely here. The dollar cost averaging effect of the algorithm, the stop loss which minimizes the loss, the take profit that secures your returns, the bot profit that is always positive, it goes to your pocket and you can use this money to open new trades. So you can always put this return into new trades to make it work for you. Basically reinvesting your profit. That's the thing. You look at the bot profit, you see it made me like $533. That means that at least I can set another bot with 500 investment to make it work for me again, to use my profit to generate me more profit. Reinvest your money, by the way, and never risk more than you can afford to lose. So all the trades that I have here, I'm totally indifferent towards the risk, even though I have stop losses and all that stuff, but never risk more than you can afford to lose. Put some money in cash just for security. Like you see I have some in cash. That means I'm out of the market as of now with this amount. So never risk everything. So what's the formula for the investment at the top above the bots? So the investment change basically change the value. It takes the value change of the base in open orders. So it looks at the value change of my 1000 0x's, and plus it takes into account the bot profit generated so far. That's $12. And this gives me the total sum in the investment. So it compares basically the current value with the value I invested, and it shows me the change. Yeah. That's pretty much it. And if you want to learn more about the bots and different scenarios, you should check the webcasts that we had 3 months ago on the YouTube. And those webcasts that we had 3 months ago, they pretty much cover more ready-made strategies for the S-bot and the classic bot. So you can check them. You can also check some other short videos that we have on YouTube where I explain how to set up bots. and you can go to Bitsgap main page to check some articles in the blog where you can learn more about the useful indicators that you can use in the trading. So for example, where is that? Yeah, for example, this tool, the order flow as support and resistance, interesting tool to use. You can use this article to read more about the RSI that you can also use. So whenever the RSI value is low, that pretty much signals you for the entry buy, and you can actually use this logic. You can look for the divergence on the market to see whether the trend is strengthening or weakening. So I mean, there are lots of tools that you can utilize in trading in order to find the right market timing to enter the market. So it's there for you. Use them to come up with your ultimate strategy, and use my insights and logic to experiment as well, right? So I gave you my trading, I gave you my grid step range from 0.7 up to 1.4% for the sideways market formation. Use this insight from me. Use 4 trading setups that I just explained to you today, and play with the combo bot to hedge against the risk, and try to find only those entry opportunities when your stop loss is close to your entry price. For the first time, if you trade a combo bot, try to use really only best market setups. Don't risk if you're not confident in the current market conditions. Risk only when you have the best entry price based on the risk management. So thanks a lot for your time. Appreciate a lot. Leave your feedback. We always take into account what you guys want us to do. Yeah, just speak up, share your ideas, and I always read them, and make sure that the next time I can bring you more insights and use cases so that you could learn more about the Bitsgap and how you can use these tools to generate the maximum return. So based on current market conditions, I stick with the sideways market configurations that can bring you around 30% per month. But on the rising market, I will show you how to set bots to have 100% per month based on my experience. But that's not the limit, of course, you can have more. It's just that depends on the volatility and all that stuff. So thanks a lot for your time, appreciate, and really hope to see you